interesting and very important conversations to have. There are lots of challenges bedeviling MSMEs development across the globe. Now we will bring you to the sub-region ECOWAS. You also find out that access to finance, access to funding is usually the commonest problem that SMEs will say that they faced. However, the question remains, are you investment ready? What is your level of investment readiness? Have you been able to position your business in such a way that you can attract investors, you can attract investors, you can attract grants, you can attract financial support? So there's a few things which of course we'll just touch on a few of them. One is getting into a business and building a business, do you even have a business plan? So you must first and foremost sit down, ideas, come up, this is my business plan. Then you have to do some level of research to also identify a problem statement. What are you going to go and solve? Are you going to go and do business A? Because you have a friend that once difficult and successful is doing it somewhere in another location. And because of that, you want to delve into it. So, for example, if you are in an environment, have you identified the gap? Is there a need? That is there a problem you're trying to solve with that business? So again, you also need to establish the knowledge of the market and the industry you want to delve into. If you understand the knowledge and the industry you want to delve into, it also enables you to put yourself together and you put that business together. Do you also have the right network, the right market connect, access to market? When I give you funding to do this business, for example, you're a small scale producer and you produce and there's no access to market for you to sell and of course increase your revenue, you may not be successful. Again, it's also understand the kind of funding that you need. Are you taking short-term funding for long-term projects? These are all part of the challenges. Are you also credit-worthy? What is the level of credit-worthiness of that business and the promoters of that business? If you have also taken credit facilities before, and you have challenges with that facility, for instance, and you are enlisted in the credit bureau of Nigeria, talking about our local client, you might not be able to further access credit from any financial institution in Nigeria because the whole idea is not to encourage credit rascality. So do you have credit character? Do you have that credit worthiness to be able to access funding? Do you also how have you also been able to keep your books? So, working with SMEs, likely nano, micro, even startup businesses, micro, and of course, the guys that are going to the mid-tier, I will call medium businesses, for example. You probably will see instances where you receive an application and someone tells you, I want XYZ number of millions to pay over a period of 12 months as a working capital. Now, when you tell the person to put forward your bank statement, from whichever bank it is, let's say when you look at it and do some sensitization to sensitize your cash flow. And more often than not, you find out that those bank statements might not justify the amount that business is requesting because that business may not have been routing the money, the sales of that business through a banking institution. So it becomes difficult for us to be able to simulate and look at and agree on what is that the capacity in terms of sales revenue. So poor accounting record is also part of it. Again, it's poor technology scale and poor digitization. So have you also been able to scale your business? So there are some businesses, there are some line of business you're doing. If you are also not very innovative to innovate, because the business landscape continues to change very often and is very dynamic. So, for example, if you're into publishing, for instance, what's the level of investment you want to start doing in terms of equipment in that sector? How are you able to scale, for instance? Prior to COVID, the volume of sales you used to do, vis-a-vis now, they have quite a lot of things digitized. So do you want to also digitize that business and innovate and so on and so forth? Again, the right human resource scale. If you lack the people that will work with you as a business, employees that will enable you to drive this business, it also becomes a bit of a problem. Because you need to have the right talent to bring them on board, attract them, that will enable you to run the business, to start putting some level of structure and governance around the business. And as an entrepreneur, you must also try as much as possible, no matter how small scale you are, to separate yourself from the business. You must put yourself on salary, for instance. So if you're also spending directly on your personal expenses from the business, you're going to compromise the business capital. So there's quite a lot of these things, a lot of these challenges, that can inhibit, businesses from accessing credit. So if you're coming to the bank, they want to look at your credit record, your credit history, they want to see your own skin in the game. So your skin in the game can be, what is your own capital? What capital have you put in the business? So maybe it's from your savings that you're able to inject in the business, of family and friends that you've raised funds to, and all of that. So you can now be able to say, I'm attracting XYZ. Again, the business you are doing, is this scalable? How can the business survive environmental, social, and economic impact? Is it a business that can stand the test of time? How are you also exploring the ecosystem of the industry you operate in terms of the value chain, collaborating with distributors and all of that to be able to access markets. Then you also need knowledge to begin to organize yourselves. You need to understand when there are intervention, financing from development finance institutions, social impact investors, and so on and so forth. Now, also speaking from the point of financial institution, there's some of the banks can also do. So today, part of the mega challenges is because that businesses or entrepreneurs can also not afford a collateral to collateralize or secure some of their loans. That's why, like for us in my institution, what we did was to roll up our sleeves, work with SMEs to understand how we can lend to them without necessarily looking for this collateral, what we call the cash flow based lending, where we want to take some level of risk, to give them this money without collateral, relying on their daily sales cash flow, and at the end of the month they're able to repay. And in doing that, there's also some level of collateral haircut that you can take as an institution. So that's why you also see the banks working with institutions that we call the credit guarantee institutions. Institutions that provide the bank with guarantees to further encourage the bank to lend to SMEs that do not have collateral, to do what we call shared risk facility. So it encourages the bank to be able to do what? To lend more, create more risk to some of these SMEs that are hitherto not financially included, excluded, or in the bank, or not getting the right, credit facilities. And of course, as an institution, creating the right framework. For instance, we have what we a program largely for women in an institution we call Sarah Proposition. And under that, we also do cluster-based lending, right? So we have women in businesses of proximate that we call them affinity businesses in markets and location in clusters. So we lend to this cluster of women that do businesses. And at times, collection is important. And the woman that takes a table and chair to sit by a market roadside to sell a carton of fish, go to the cold room, take a carton of fish, sell it till 5 p.m. in the evening, the remnant she takes it back to the cold room and go back home, do not have much capital and might not even have the time to leave the shop or her store or her stand or where she puts up a table to sell, to go to the bank to say that I'm depositing money. So we work with people that we call the thrift collectors. The thrift collectors, Nigerian funding call that job, to help to work with us to be able to get these people to help pick up their collection and their daily repayment for some of these loans. So it's a painstaking program where we try to understand the uniqueness of various clusters and configuration of these businesses to be able to advance them these facilities. And now put a collection framework in place, because if they're unable to repay, fund the account on a daily basis, they might not be able to renew those facilities. So we do there are lots of need for digital financial literacy program. And also again, some of them that are not close to where there are physical bricks and mortar financial institutions. So we digitized the lending processes, and to also enable two of them that have smart gadgets and smartphones to get on the app, request for loan, get it in 5 minutes. All their going and paperwork is done digitally. We also do recognize that regardless the level of internet adoption in our own time, there are still a huge number of Nigerians and of course businesses who do not have access to internet facilities. But of course they do have access to phones. So those of them that do not have smartphones can also have access to these loans because they can use what we call the USSD, the star 945 hash to access these loans. So regardless whether you are proximate to a physical brick and mortar branch, you are able to also access it. But what's important is that as a business, you must have done one or two of those being ready, putting yourself in a lendable or investable position so that you can be able to attract funding from the banks, funding from investors, funding from friends, and also your business being ready to be positioned for grants. Because it is not all the time that you must take loan, and I repeat it, it's not all the time that you need a debt equity where you pay interest. So sometimes you see institutions like Wema Bank organizing what we call the Funding Connect. The Funding Connect program is where you bring founders of businesses and funders of businesses together and allow them to pitch and get it, and they will now get some level of investment in their business. It's something I'm very passionate about. If you allow me, I will talk about it tomorrow morning, so I'd like to start by this point. Thank you very much.
Thank you. Any insights to be learned from the businesses who have successfully obtained such funding? What has been the success rate so far? Let me repeat the question. Are there any insights to be learned from the businesses who have successfully obtained such funding? What has been the success rate so far? After, this is for you based on your SME banking that you have rendered to businesses.
Thank you very much. Yes, and yes. In the last 79 years, what Wema Bank has been doing is funding and supporting MSME development in Nigeria. And of course, quite a lot of these businesses will also begin to take them into the international trade corridor to access, the international trade corridor. So there are lots of them, and we have made tremendous success, and we cannot talk about it exhaustively. So we have seen employment creation. We have seen birth of new businesses. We have seen an increased ecosystem. So some of these businesses that we have invested in, remember, the approach to Wema Bank is heavy on impact investment. Yes, we are a profit-oriented institution, but what is important is not for me to give you money and you pay me. That's why under the MSME business group of the bank, we have a robust arm of the business that we call the non-financial advisory services, where we look at technical assistance support, scalability, sustainability, and business continuity. So yes, in terms of the impact and lessons to be learned, is that in the modeling of our financing is modeled in a way that as we are deploying this funding to you, we've taken a temperature check of number of employees you have before accessing that loan, the business size, welfare of the people working in that organization in terms of salaries and all of that. What is the ecosystem, what is the value chain opportunity that that business can create, taking that form. So over a period of 6 months to 1 year, working with our consultants and partners, we are able to come back to now check. You took 20 million. Before now, it was you and your daughter. 20 million was injected in this business. What has happened? What impact have you created within the environment? How have you been able to scale? How many people have you been able to employ? The people you've been able to employ, what is their remuneration? Over a period of 6 months, 1 year afterwards, have you been able to, in line with inflation, also adjust the welfare of your staff and all of that? Then in the ecosystem, so you are selling X, Y, and Z, are there other businesses that have been able to come up or better because of you as a business, that their survival is tied to you? So those are the limits. Then we also now have seen quite a lot of them have been able to scale in terms of their financial records, in terms of their sustainability charter, also doing business in an climate-friendly environment such that, climate-friendly impact investors are now coming to say, how do we support you? We've also seen where some of them have also been able to scale down the cost of their operations, improve their cash flow, improve their profitability. For instance, going green, dropping the cost that they spend on fossil fuel. That money is now being able to plug back and the business will also expand it. We've also seen instances where some of these guys have been able to collaborate, to have some level of collocation. So you don't need to probably share office spaces, share like some power generating solar plants and all of that, and also even outsource. You've seen where they were able to also optimize and have like 1 or 2 persons managing social media handles of about 3-4 businesses, and have also increased footfall and also patronage. So yeah, that is it. And these are because we are very detailed about our financial modeling. Is it the way that even when you now come for some level of renewals, we are able to check all those other social impacts that have been created because of those businesses. And again, now have them becoming crusader, ambassadors to help to educate people within the ecosystem and all of that, and take a whole lot of people and of course the financial involved. Help them manage their cash management services, digitize, adopt digital tools and all of that, and also begin to scale. Some of them, because they've done well, and we have also seen that for us to scale, they may not be able to cope with the commercial lending interest element. So we take them to development finance institutions to access intervention funds that is going to drop largely their interest expense, which will also be poured into the business and all of that. And we've also seen a lot of them become regulatory and tax compliant. So they're able to now pay taxes, become a lot more corporate, social responsible citizens by paying taxes as a business and paying taxes. We've also seen quite a lot of them comply and improving the loss of their employees by having some kind of health cover, HMOs for their staff, certain stipended and pension fund and all of that. So we have also seen, that doesn't mean that we have also seen challenges in the course of doing this business. So what's important is to continue to learn and to continue to work with the businesses. And for us in Wema Bank, we have what we call a discounted banking approach for women businesses. Sometimes the low customers get a bit upset about it, but of course we need to be deliberate because women are a lot more resilient and all that. And again, we're also looking at challenge regions, even further supporting female businesses in regions like the Northeast and all of that. There's a lot we are doing currently in places like Yobe and all of that. And even the recent flood issue that happened, that have also displaced about 1 million persons who are currently now in 36 UIBB camps. We also provide them support, even helping them to do business even whilst they are also still in those camps and all of that. So yes, there's a lot of improvement that we've seen, which is encouraging, and probably why we are also being able to try in business. And of course, we'll continue to do that. And working also with other regulators like NAFDAC, SO, and so on and so forth, to also ensure that as we have bucketized SMEs in various sectors and segments, we also ensure that they play within the confines of the regulatory requirements to ensure that the trend and they continue to be sustainable. Thank you.
My name is Nkemeh. I'm the head of SME banking in Wema Bank. Wema Bank is a focused SME bank, and in the last 79 years, what we've done is to work with MSMEs, especially women-led businesses, to develop their capacity, grow them, increase their resilient level, and of course drive economic empowerment and job creation. So organizations and associations like FEBWE is part of the people that we partner with to also further drive the SME business. What's important to us is how we can work with MSMEs and other stakeholders within and outside the shores of Nigeria to also grow African trade. Of course, working with association with FEBWE will be able to support Nigerian businesses to enable them unlock the ECOWAS trade to promote their trade. So that's part of the reason why we are partnering with FEBWE. Basically, of course, these challenges around gender inclusion, challenges around having a tailored, dedicated learning program for women. You must be deliberate about banking women, you must be deliberate about the modeling of financing women. For us in Wema, we are heavy on gender, we have gender proposition, we have a proposition called SARA. And under our SARA program, we have various interventions that speaks to their resilience and enabling them to access financing, ensuring them for grants, especially things around green financing, creating market access. Market access is very important. That is part of the challenges, and of course, helping them to set up their book, to have proper bookkeeping, getting them the investment trade, and finance friendly. Because as a woman that runs a business, if you recognize you have a business plan, you have a structure, you've been able to do your research, you understand the market you are playing in, and all that, have the right resource and the right market connect, you'll be able to start attracting money. And most importantly, working with a bank like Wema Bank that understands financing needs for women. So there's a lot we are doing with that, and that is why Wema Bank today is beginning to win international awards across the globe. We just won some awards in the last couple of days. We look at Brazil and the World SME Forum and all that. That speaks to our focus and support for gender financing.